Predicting future sales with Excel step by step. Let's say you work for a company that sells sports equipment. You have been tracking monthly sales for the last 12 months, and now your boss wants you to predict how sales will look for the next 3 months. You will use Excel to forecast future sales based on your past data. Don't worry, it is easier than you might think. Let's break it down into easy steps. So this is our first Excel exercise. And here we can see the sales dollar value for different months starting from January to December. We have to figure out the sales in dollars from January 2024 to March 2024. So let's first color the cells blue because those are the ones which are going to be calculated. Just to distinguish between the calculated and the given. So the first way you can figure it out is that you can insert a 2D line chart, or you can just simply calculate the slope and the intercept and then calculate the forecasted values for January 2024 to March 2024. So let's see the first method. First, select all the cells here for month and sales starting from January to December. Go to insert, go to 2D line. So here you can see the fluctuation of sales for different months. Select the graph here, right click, and then go to add trend line. Select the second one, linear. And then if you want to see the R square value, just put a check here. So what is this R square value? It shows the correlation strength. Select the graph again, and it will show you the trend line. And here you can see here for forecast forward. If you want to forecast the values from January to March 2024, that is 3 months, January, February, and March, just type here 3. And see here, starting from January 2024 to March 2024, it shows you the forecasted values, which is somewhere between $5,500 to $6,000. So here you can have an idea on what can be the sales for the next 3 months. This is one way. The second way is more precise. You can precisely determine, or you can quantify it better using the second method. You can use the forecast sheet method. To do that, first select the cells here. And then go to data, go to forecast sheet, go to options. So here's the forecast start date and here's the forecast end date. I want to start from January of 2024, but if it is December of 2023, still okay. Just a bit of overlap doesn't matter much. And the forecast end date is March 2024. So go to the calendar here, and instead of April, just go to March 31st. Here is the confidence interval 95%. We will see what it means. And then finally, go to create. And we can see the sales value for different months. These sales value are given, and these are forecast sales. So we already have the forecast sales starting from January 2024 to March 2024. These two columns, column D and column E, show the lower range and the upper range of each month. Let's interpret the results. So let's first interpret the results using a 2D line chart. So the solid blue line shows the actual sales data from January 2023 to December 2023. The dotted line represents the forecasted sales for next 3 months starting from January 2024 to March 2024. What the chart tells us? Stable sales pattern. Sales data shows small fluctuations, but overall the trend is relatively stable. Sales generally hover around the $5,000 to $5,500 range. Forecast for 2024. The forecasted sales for January, February, and March 2024 remain close to $5,500, suggesting some growth in the near future. So here see, suggests some growth compared to the previous months. R square value is 0.60. The R square value indicates that the model moderately fits the sales data. This means the forecast is somewhat reliable, though not perfect. Because if the R square value is, let's say, 0.90 to close to 1, then that means it's a very good fit. This one is just a moderate fit. A higher R square value closer to 1 would mean a stronger relationship between past sales, and future predictions. Business implications. Since sales are expected to stay stable around $5,500, you can plan your inventory accordingly to avoid shortages or overstock. Recommendations. Track changes regularly, keep updating your sales data, and revise the forecast every few months to capture any new trends. Test different scenarios. Try introducing variables like promotions or discounts in your forecast to see how they impact future sales. Now, what about the forecast sheet method? The forecast sheet feature is available in the following versions of Excel: Excel 2016 and later versions for Windows, Excel 2019, Microsoft 365. This feature is not available in older versions like Excel 2013 or 2010. The forecast sheet allows you to create a forecast based on historical data, and Excel automatically creates charts and tables to show trends and predictions for future data points. It is part of the Data tab under the Forecast group. Common scenarios where using the forecast sheet is ideal. You should use forecast sheet in Excel when you need to predict future data based on historical trends. It is especially useful in cases where you have a time series and you want to project future values. Here are common scenarios where using the forecast sheet is ideal: sales forecasting, inventory management, financial forecasting, project website traffic, operational planning, trend analysis for any time-based data. When not ideal: unpredictable data, too few data points, need for advanced forecasting models. Now let's interpret the results we got for the forecast sheet. Key components of the forecast. Forecast sales dollar. The red line, so this red line you see here, the red line represents the predicted sales for January 2024 to April 2024 based on historical data. So you see here are three lines. For red line, there are three lines. The middle line is the forecasted sales, and the upper and the lower line are the lower and upper range of each monthly sales. So lower and upper confidence bounds. These red bands around the forecast show the range of possible sales outcomes, meaning actual sales could fall between these bounds with a certain confidence level, usually 95%, because that's what we set in Excel. If you want, you can change the confidence level from 95% to any level you desire. Analysis of the forecast. Predicted sales growth. The forecast shows a slight upward trend for the next few months. From January 2024 to April 2024, predicted sales range between $5,876 and $6,200. So this indicates a moderate increase compared to the past year's average. Confidence bounds. The lower confidence bound suggests sales could be as low as $5,512. So you see here the forecasted sales are from January to April. And what is the lowest value in the forecasted sales? So this value is the lowest, $5,512. That is the lower range of February 2024. The upper confidence bound suggests sales could be as high as $6,109. So that is the upper range of the March 2024. This range helps you understand the uncertainty in the forecast. While the central forecast is the most likely, sales could fluctuate within this range. Business implications. Planning based on forecast. With predicted sales likely to stay between $5,500 and $6,100. This gives you a good range to plan for inventory, staffing, and marketing. Manage risks with confidence bounds. The lower bounds show that there is some risk of sales dipping. So you may want to prepare for this by having a backup plan, like running promotions or adjusting inventory levels. Recommendations. Review forecast regularly. As you gather more sales data, revisit the forecast sheet every few months to refine the predictions. Take action based on trends. If the forecast shows continued growth, consider ramping up production or marketing. If sales are expected to dip, you may want to strategize on how to boost demand.